Well, home prices in Canada's largest market have dropped at the fastest pace in more than a year. October's benchmark selling price in Toronto fell 1.7% from the month before. That is the third straight drop and the fastest pace of decline in 15 months. The seasonally adjusted number of sales declined 5% compared to September. And home prices aren't the only thing dropping in the GTA. A new report from Urbanation showed that new condo sales in Toronto are down 47% year to date. And along with it, new developments are being left on the shelf. For more on this and what it means, let's bring in Shaun Hildebrand, president of Urbanation. Thanks so much for coming in.
Thanks for having me.
So when we talk about new condo sales being down 47% year to date, is that pre-sales, or that's a condo that's finished and I could be purchasing it and moving right in? What sort of state is new condo?
So the majority of new condos are sold as pre-sales before construction even begins.
Okay.
And as you mentioned, we're seeing much fewer new condo sales this year, down 47% from the same period last year. And in fact, we're on track to see the lowest number of new condo sales in about 10 years.
Wow. Okay. So the last time that sales were this low, what was the sort of environment like? What was going on at the time?
Well, we were just sort of emerging from the global financial crisis. Interest rates were sort of resettling. The economy was sort of up and down. Immigration levels were certainly much lower than what they are right now. And then actually, if you look just over the last few months, new condo sales are at one of their lowest levels of the past 20 years. So the situation doesn't seem to be getting any better, at least in the near term.
When you think about those condo pre-sales, are those typically being bought by investors versus someone who's thinking 3 to 5 years from now, I want to live in that condo when it's, actually up and constructed?
It is majority investors. We see that most investors, they do buy pre-sale units. Ultimately, most of them end up hanging on to them as rental units. So this has really been the way that at least the GTA has been building new rental supply. It's through selling new condos to investors who ultimately add them to the rental pool. So it's an interesting point. As investors sort of scale back their purchases of new condos, it's going to start to slow down new construction, which we actually already started to see in the third quarter. And then ultimately, it's going to slow down the delivery of these units, which are de facto our majority of new rental supply.
It's interesting because you could think, oh, perhaps that opens the door for someone else. If an investor that might have deeper pockets could, scoop in and maybe grab a couple units, maybe that opens the door for your average person who wants to buy a place. But when you're looking at the cost of just maybe a 500 square foot condo in this city, what would you be looking at right now in this moment of time for a pre-sale condo right now?
At least $600,000.
Okay.
And you'd have to wait 5 years before the unit is built, which is why the majority of units are sold to investors. Most of the people who want to live in the unit themselves, so-called end users, will buy much later on in the construction process, or they'll buy a resale unit that they can move into within a few months. And that segment of the market, first-time buyers, has been impacted quite considerably as well because of higher interest rates. They have to qualify at interest rates above 8%. So you have investors who are really discretionary buyers who are kind of uninterested in purchasing in the market right now. And then you also have first-time buyers that have been very significantly impacted by what's happened to interest rates.
So tell us more about the sort of domino effect that's having then on construction in the city.
Yeah, so there's usually about a 12 to 18 month lag between what happens in the pre-sale market and what happens in terms of construction starts. We started to see new condo sales fall pretty significantly starting in the second half of last year. And as that's happened, more recently, we've started to see a slowdown in construction starts. There were fewer than 2,000 new condos that started construction in the third quarter. If we are to be on track to meet the province's goals for housing supply, we need to be starting construction of at least five times as many units. So we're kind of moving in reverse for what the province wants and needs right now in terms of new housing supply. And we're also starting to see more and more projects that were supposed to launch in the market kind of be put on the shelf, at least for the time being. And that's one of the key reasons behind the big drop in new condo sales, is that we're not seeing as many new projects brought to market. Developers are realizing that in order to sell in today's market and earn a profit because of how high costs are, they need to keep prices pretty close to where they are, but the demand at those prices has shrunk considerably.
I mean, there's a lot of interesting stuff in there, but when you're thinking about what's needed in those starts, I mean, what would change the equation? What would get construction to those sorts of levels, if you're depending on the person or the investor, or, the retail investor to be investing in those units, I mean, it would have to be interest rates, that sort of change?
Yeah, I think there's just so much uncertainty with respect to the market outlook because of how fast interest rates have risen. And obviously, there's a lot of headlines today about whether or not we're entering into a recession. So there's more uncertainty from that regard. So I think some stability in the resale market would be needed first. Usually the resale market acts as a leading indicator for the new sale market. New construction buyers like to see that there's stability in the broader market before they enter into buying pre-construction units. The latest data suggests that that's not necessarily the case, at least yet. So I think, once we start to see interest rates potentially come down, more clarity around the economic outlook, we'll start to see confidence improve amongst pre-construction buyers.
You also did a report recently on apartment rental building construction as well. And just very quickly, what are you seeing on that front? Because that's been a focus too. Yeah,
so we don't build many purpose-built rentals in the GTA. We saw the number of units under construction drop to a more than 2-year low. So we didn't already have a good starting point, but to see that it's actually moving in the opposite direction of what we need is pretty disheartening. And that's, again, going back to the cost environment for developers, right? High construction costs, development charges have risen 40-50% in the last few years. We've seen some new policy measures come in, so the removal of HST for new builds, which should help to, I guess, give a much needed shot in the arm for new rental construction. But I think, given how far away we are from meeting population requirements, we need much more policy encouragement to drive new supply.